What is the intrinsic value of Mastercard? We're going to keep this video as short as possible. We're going to take a look at the latest earnings report of Mastercard, all the important financial metrics, as well as some key financial ratios. Also, we're going to use these valuation models to come up with an intrinsic value. We will take a look at analysts' expectations once we know the intrinsic value, and I will also give my personal opinion on the stock and let you know if I am buying Mastercard or not. So let's dive right into it. For starters, Mastercard is trading at $448, up almost 20% from a year ago and up 5% year to date. Looking at the latest earnings report, we can see that the year-over-year growth is amazing. Revenue grew by 10%, net income by 16%, and EPS, earnings per share, by 18%. Look at the growth of the credit card industry as a whole. This grew 10% worldwide, 6% in the US and 13% worldwide. Taking a look at the future outlook, Mastercard has changed its outlook for the future, and not in a good way. The forecast on both revenue and operating expenses has switched from the high end of low double-digit growth to the low end of low double-digit growth. So let's continue on to the key financial metrics and the performance of Mastercard over the last decade. Be honest, don't you get the itch of buying Mastercard by just looking at these charts? It is showing dollar signs all across the board, starting with the two charts that make Mastercard so beloved by dividend investors. The rate at which the dividends have grown over the past 10 years is insane, from only 44 cents in 2014 to $2.29 in 2023. This means having a 10-year dividend CAGR of 13.55% and a 5-year CAGR of almost 18%. To keep on raising these dividends by so much, your cash flow has to keep on growing too, and Mastercard has been doing a phenomenal job of doing just that, going from $2.63 in 2014 to $11.51 in 2023, having a 10-year free cash flow CAGR of 13.29% and a 5-year CAGR of 16%. With only a free cash flow payout ratio of 20%, Mastercard has a lot of cash left over to reinvest back into the business. It can be used for various things, one of which is buying back shares, which Mastercard has done a lot, going from 1.17 billion shares in 2014 to 946 million shares in 2023. The growth in the business is supported by both the growth in revenue and earnings per share. Now that we've gone over everything, let's answer the biggest question of the video. What is the intrinsic value of Mastercard? To answer this, we're going to make use of these valuation models. Please do me a favor and hit that like and subscribe button. I am going for 136,000 subscribers by the end of the month.
You serious?
Let's start off with the discounted cash flow model, which calculates the intrinsic value by using the future free cash flows, discounted back to the present value. By plugging in the historical free cash flow and using a growth rate of 14% and a discount rate of 9%, we can calculate the present value of the future free cash flows. By adding the cash and cash equivalents and subtracting the total debt, we get an equity value of the company. By dividing this by the shares outstanding, we come to a price per share of $454.59. Next up is the dividend discount model. This values a company based on its future dividend payments. We plug in the historical dividend payouts, giving us an average growth rate of about 15%. Using a discount rate of 9% and a growth rate of 8.5%, which is much lower than the current growth rate but very sustainable for the long-term future, we can calculate the stock price, giving us a price per share of $572.88. The third and last valuation model we will use is the multiples valuation model, which assumes that similar companies should be valued the same. Companies that are similar are American Express and Visa. Using the PE ratio of these companies and the earnings per share forward-looking of Mastercard, we come to an intrinsic value of $368.04. I don't just want to evaluate Mastercard using other companies, but also compare it to its own history. So let's take it a step further. I want to know how the price to earnings ratio has been doing over the past decade. And remember, the lower this ratio, the cheaper the company. We are not seeing the PE ratio moving at all. It stays around the 35, very stable. Compared to Visa and American Express, it's a little bit higher, but nothing too crazy. It's close to market average. After calculating the intrinsic value using numerous valuation models, we come to a stock price of $465. This is higher than the current market price of $448. I also like to use a margin of safety as suggested by Benjamin Graham, the mentor of Warren Buffett. By using a margin of 10%, the acceptable buy price is lower than the current market price. However, I believe Mastercard is trading at a premium and is a very future-proof company. Looking at analysts' expectations, we can see that Mastercard is valued higher than the current price. I totally agree with this forecast. Even though it's lower than the calculated intrinsic value, I believe Mastercard is trading at a discount. I have only one stock in my portfolio, but tend to buy some more. It's an easy pick. Which stock would you choose? Mastercard or Visa? To get a better understanding of Visa's intrinsic value, you should check out this video on screen. If you made it this far into the video, please consider subscribing to the channel and liking the video. Can we get maybe 3 likes? Thank you so much for watching and I'll see you in the next video.